All right, what's up, you guys? Welcome back, everybody. Here we go. Another beautiful day. First and foremost, I just want to apologize basically not to upload anything roughly in the past week and a half. We had July 4th, I had a little vacation. Also, I have a lot of things to do with my business right now. So I was trading, not as much, but everything was going well. And I have the current green streak since June 16th, so closely a month. Every day I was, not every day, but the days I was trading, everything was green, including today. So we have a very, very nice green streak in our hand. And let me show you guys the breakdown, what we did today. Today, I reached about 5 times, about 4.5 times of the daily goal. So today was a perfect day, a lot of opportunities to the long, to the short side. And let's just get in. Let me break down the trades. And also, as always, if you guys like the content of this channel, please hit the like and subscribe button. Also turn your notification on. And again, let's get in. Let's break down the trades. All right, let's do our recap here. The market is still open. Maybe we have another half an hour to go. I was saying if these breakdowns gonna happen, and I would be able to get into another trade, but what we can expect is, summertime before a major data comes out. Everything is intent to be slow and choppy. Today is a ridiculous day. Very, very choppy. Right now we about 50% of the past 30 days volume, which is extremely low, but somewhat is understandable. The only thing what is very difficult to understand, when all the major top participant for the S&P 500, like Apple, Microsoft, Amazon, Google, Tesla, everything is down 1.5, 2%. QQQQ, okay, now it's just getting close to break even, but still in the negative. Yet SPY is unable to break this basically the insignificant 438.80 level. Well, it's significant for someone, right? Because it's the market is just buying it up most of the times as we get to it. I think eventually it's gonna go, and if it goes, it's gonna go very, very hard. But let's talk about what we did today. Today was an excellent day. We traded 4 times. 3 of them was a winner. 1 is a loser. You had opportunities, right? But when the market is like this, you have to be very, very quick. Otherwise, you're just gonna get chopped up. The theta is gonna eat up the contract, so it's not no point to being in it for a very, very long time. In my point of view, that's the way I trade. This is what I show you guys. Of course, I know I'm gonna get comments, why this, why that. Everybody trade different, right? This is the way I trade. This is the way I explain how I trade. So, right, it is what it is. Is the past month, closely to a month, we have a green streak, very, very nice. Every day we manage to close green for a long time, which is helping the account. So let's get the breakdowns. Today is the 10, right? So the first entry, let me just zoom in for the morning, right? We can see how choppy everything is, right? One candle basically in this area, the morning area, not much to see, right? Except these breakouts right here, right? We have a nice little trend line what we can put in here, and then we have the breakout, right? But let's get back to here. But what is really interesting is the top contributors to the S&P, right? What is the gauge how most likely the S&P is gonna trade, right? Right now we have Apple, we have Microsoft, we have Amazon, we have Tesla, we have Google. All this is trading more than 1.5% down. Some of them even 2.5%. Google almost 3%. Tesla over 2%. Amazon 2.5%. Google 2.5%. So it's just ridiculous how S&P can hold this level when all the major players in it way down in the red. Well, it is what it is. This is what we call a market manipulation, right? But if we get hung up on it, then we're never gonna go anywhere. So we just have to trade what we get, right? So today, because of that, I had somewhat a bias, right? Because usually when you have all these players in the red, the market's gonna be red, right? Not today, right? But this is I just breaking it down for not to be biased, because we never know how the market's gonna react. Well, I had the bias to the short side. We had a very, very choppy morning. Basically, we didn't go anywhere. We had the breakout. So when this breakout happened, because everything was red, my initial thinking, okay, we hit a resistance level, right? And then we're gonna reject. It did happen, the rejection happened, but not the moment as I was anticipating. So let's break down the trade. My initial entry, let's go, today is the 10. My initial entry, I entered into the trade as the breakout happened. Let's put our little arrow, and let me just take this down. We don't need this right now. We're not trading, so let's just see the chart. So my initial entry, it was the high of day rejection on 10.10. As we reached the high of day, I entered. We had a little pullback, but unfortunately we were keep running higher, and because of that I added to my trades numerous times. And this is, again, we can talk about the concept of averaging down or scaling in. This particular one, even with scaling, even we're going into the negative. All right, so again, the scaling in and averaging down, in my point of view, because of everything was going down, right? Everything was red, deep red. My thinking was, as we go higher, I can gain a better entry, right? And that's the whole concept. It doesn't matter average, down, scaling in. But because of that reason, I see these as a scaling in opportunity, right? As we break, and let me just explain why it's important, the levels, right? So as we initially broke the high of day, I entered, right? We had our previous day point of control. As we reached that level, I entered for a rejection. Why are we not changing? I entered. This level basically has no any significance to anything in my point of view. So my level was for exit. It's a deep level, but this was my level to exit from the trade. But we had to wait how everything is forming, right? So my initial entry, rejection of high of day, adding to the point of control rejection, which is basically happened at this point over here. I was green in the trade, but then suddenly as a support for the high of day kicked in, right here, we went higher. And basically I added 1, 2, and I added one more time in the 10-10, which is as we came down, right? The rejection, because we had 3 candles over here, rejection, first candle make a new low, I entered the 3rd time. So down here, when we had the rejection, I already had a very, very good profit. Yet I still didn't take profit because I was certain we're gonna go back lower. Unfortunately, didn't happen. The high of previous high of day, it's held it again as a support. We went back higher, but at this point here, right now, you already have an indication for the exit, right? Which is the high of day. If we go above and close above, we basically reached it with a cent, and then we rejected, and then from that point we rejected very, very hard. When I started to take my profit, I started to take my profit in the 33, 32, 33. So this was the point from down here where I started to take my profit over here. And then as we went further down, as you guys can see, I was scaling in 33, 34, 35, and then as we started to come back up, half of the candle. So this particular trade give me over 100% trade. And I'm gonna calculate for you guys the percentage. I didn't do that. And this is just gonna be a rough calculation, but I believe this is already over 100%. Yeah. Well, not the entire trade. Definitely I had not the entire trade 100%. Definitely I had exits over 100%, but most of the trade, it was somewhere in the between the 80 and 90% as an average. So this one was a perfect trade. And after this, another perfect trade followed, and I entered into this trade. I had to wait a little bit to see how all these gonna turn out. When this happened, I just left the room, so I wasn't even see what's happening in this part. This would have been the rejection, right? Another beautiful trade. I wasn't by the computer. I didn't see, didn't participate in it. But our next trade happened basically exactly in the same concept. 41, this was a perfect trade. I catched it in the perfect moment. My entry 41, exactly as we broke the rejection. Again, we went back to the same level. We rejected. Obviously, this trend line is not there at the moment because this is the one what is give the support for the second leg of the trend line. So I'm gonna remove it. This wasn't there, and obviously this wasn't there either, so let me remove it. But we had this trend line, and that trend line, it came basically from the pre-market and the open, right? So we had that trend line, which is showed us already it has significance in a daily, in the intraday trade, right? Because we had it as a support, we worked around it, rejected, and then we was holding with this pivot high, right? And then as the rejection came from that level, that was a perfect move. I entered 41, exited 44, 45. As the big candle break, 44, as the other candle break, 45. So this was the 39 puts, and exited 44 two times, and exited at 45 three times with multiple high contracts. My entry was at 69. The exit at the 44 level was 87, and at the 45 level 98, 104, and 99. So that one also about a 40% trade overall. Beautiful trade. So far we had two beautiful trade. The third trade, if I recall, it was a long, and exactly I'm right about that. And we entered at 1237, and this is when that trend line come into play, right? Exactly, that is the candle. So basically we broke the trend line, right? We already can see we are in the uptrend because we held the base, we went higher, we created a lower high, we pulled back, we went higher, right? We still didn't create a higher high, but we can establish our uptrend, at least for the moment, right? And as we broke out from the trend line, we had a major rejection, came back to the previous day low, that is the white line. And usually as it happens, the first candle make a new high, exactly that moment, 37, entry was at 37.35, 12.37.35, exactly as we broke that candle. Beautiful entry. We just had to hold it to see how it's gonna turn out. We have an established exit point, right? As we break or pivot, that's where our exit. So it's a very, very tight exit we have. Entry, and this was another beautiful trade. Exited at 41, 44, 45, and 50. So I holded this trade for a little bit longer. My initial entry was at 80, exited at the 41 level. 41 level, I believe, as we started to go red, I entered a few contracts already in a 10% profit in the 88s, and then we had a hold, we went higher, next batch 44, and as we break 45, right? Those entries was at 95 and 99, and the last one I exited at 50, exactly the previous breakdown points, right? Exactly that level. As we broke, I exited, that was at 112, at 1250. So we had three beautiful trades, 3 of 3, 80, 35. This was about 30% trade. So three beautiful trades. And my last trade, which were unfortunately a loser, at 119. I was entering basically the same concept, right? Exactly the same concept as we did before. The previous pivot level seemed holding, right? Seemed holding. I didn't make these initial moves right here, the first rejection, but after this big rejection happened, we couldn't break any higher, right? So basically my thinking was we couldn't establish a new high, right? Because as we're coming higher, we're still in an uptrend. We created a higher high, basically, even if it's just with a few cents, we created a higher high. So we break the initial pivot level. But as we came back, we failed to move higher. And that was the reason why I was thinking exactly the same thing what we did here. We break that level, we continue lower. Initially, as we broke that level, went lower. We were chopping around a little bit, and as it moved higher, I exited. Actually, I wasn't exited there because the reason that level, right? That level is our previous high of the day, and this again was a significant level, right? We couldn't break it to the upward, so it was a support level. Actually, it was a resistance, right? Because we couldn't break it. As we went above it, we couldn't come down, right? So 1, 2, 3, 4, and even when we broke, we came back to the same level. So this level here has significance. So as we went higher, I was waiting what would happen. We rejected, but because of the time what we spent over here, and unfortunately as it started to push higher, actually that wasn't my exit. My exit was at the 45. As we came back the second time, right, it took so long and the movement was so high. Even when we broke to that level, I was still upside down by a lot. And as we started to move higher, I just exited. I didn't even wait and see what's going to happen with that level. I just exited, and only once. I entered once, I exited once. It was no point to start to scale out of the trade. It was just, I was upside down. And this trade, it's about a 30% loss, 33%. Exited 65, entered 65, and this was again the 39 puts and exited at 40. So we had a 30% loss on this trade. But still we had three beautiful trades. And from that point on, well, we see what happened. It's just chopping around on the same level. End of the day, last candle of the day, pushed higher. And exactly this is what we can expect. Nonsense for the end of the day. But again, if you guys like this channel. And I know many of you already subscribed already, but if you're new, please hit the like and subscribe button, turn your notification on, and see you with the next episode.